Hey everyone, welcome back to Upside Down Data. So I've been doing kind of a bit of a mini series on the USDD stablecoin on the Tron network because I think it is an incredibly poor decision by the Tron network to go through with this after what we saw happen to Luna and its native stablecoin UST. Now I'm not going to go into all the details about how USDD works here. I'll link to a video I made previously where I go over how it actually works mechanically. But really all you need to know for this video is that it works, it's a carbon copy of the Luna UST system. It's the idea that you can always be trading one USDD for $1 worth of TRX, etc. And so what that does is it opens it up to this kind of death spiral process like we saw with Luna. So, Luna having this absolutely insane, ridiculous price chart going from at the start of the crash, around $80 to $60, somewhere in that ballpark, down to absolute zero. And the UST stablecoin, which is supposed to be pegged at $1, now currently trading for 3 cents, a complete bloodbath. And, during the massive capitulation that we had seen, back earlier on this month, we saw USDD lose its peg. It had been trading up at around $1, had fallen off of its peg, and I made a video talking about this back as it was happening. Now, one of the things I talked about in that video is I didn't actually think that USDD was necessarily going to implode then. I thought it was certainly possible, and it's frankly still possible it's going to implode, in the coming week or so. Who knows? It very well could. But I said at the time I didn't think it was as likely to explode as UST and Luna was. And the reasons that I gave for that was that if we look at the market cap of USDD, sitting at $700 million, it's certainly a lot, but it's significantly smaller than UST was back at its height. And the market cap relative to Tron, which is the main backstopper, the thing that's mainly going to prevent an infinite death spiral like we saw with Luna and UST, has a considerably larger market cap, which means that it might be able to cushion some of the fall if, in this depeg. And of course, the other thing that's been going on is that the Tron DAO has reserves that they had built up that they were, going to deploy to try to prop up the peg, and that's what they have been doing. And so on this site here, they just show kind of their current value of their collateral and the current outstanding USDD supply. And so they claim to have, a over 300% collateralization ratio. Basically, they have reserves on hand that are worth, over 3 times as much as the outstanding supply. And so that means that they have collateral, or they have, liquidity, capital to deploy to prop up the peg. And on their Twitter page, they've been posting about how they've been using some of their reserves to buy back USDD or TRX to basically try to prop up the peg of USDD. And so all those things going together were kind of part of the reason why I thought that USDD might be able to pull out of this particular capitulation and be able to live to see another day. But what I really want to talk about with this video is, even though that's happening, right? So even though the peg is starting to recover, we are trending back up closer to $1, don't for a second think that this means that USDD is not risky. Don't for a second make you think that this just proves that it's resilient. One of the things that people talked about with UST right before collapse was they looked back at 2 previous times in its history where UST had become depegged from the US dollar, but then it recovered, and they said, look, it's a resilient system, we can trust it, there's no reason to be worried. So let's actually go ahead and pull up that chart right here. We're just going to pull up the UST chart, look back at its all-time record, and we see these 2 times, right? Back in December of 2020 and during the big sell-off that happened in May of 21. These were depeg moments that were, noticeable at the time. Obviously compared to this, it looks like nothing. But these were noticeable depegs, going down to 95 cents and going all the way down to 85 cents, but it recovered both times. And so on crypto Twitter, I distinctly remember seeing multiple people saying, oh, it's resilient because look, it recovered these other times. This is just FUD. Ignore it. Don't get out of the ecosystem. Everything's going to be fine. And then the people who took that advice got absolutely destroyed. They lost everything, basically, in a matter of days. And so that's why I want to say, just because USDD might be able to survive this time around, don't let that make you think that it can't go into this death spiral, because we know that the USDD mechanic is identical to that of UST, and we know what happened to UST. When you get a big enough bank run, and especially once the asset has grown to a size where the assets that are trying to kind of backstop it don't have enough liquidity to actually maintain the peg in the extent of a bank run where everyone's trying to sell that stablecoin out into, in this case it was Luna. With USDD, it would be TRX. It's only going to be able to sustain that for so long, and it's probably going to break if the size of the stablecoin, UST here, USDD in Tron's case, is too large relative to the backing asset. Now, the other thing that you might point to and say, well, but look at this collateralization ratio, right? This means that it's safe because they have so much that they have to backstop it. Now, there are a couple things that are a little bit questionable with this. The first thing is that there's nothing mechanically built into USDD to say that this amount of collateral that's been put aside to it has to be deployed to defend it. One of the things that happened with the UST collapse, we don't really know yet exactly what happened, but there's a lot of speculation that not all of that reserve actually went to support the peg. Now, that's just wild speculation. Take that with a huge grain of salt. We don't know. But it's the fact that, this is all kind of based on trust to some degree, trusting the DAO to actually go out there and try to defend the peg. And we've already seen some kind of, in my opinion, questionable behavior by this DAO, where instead of just purely trying to prop up the peg of USDD by, market buying USDD off of the market to kind of push its price higher, instead, a lot of the DAO funds have actually been going into buy TRX, trying to trigger, short squeezes to push the price of TRX up higher, which isn't directly supporting the peg of USDD at all. It's really just boosting anyone who's holding TRX. And so that's another thing that I view with a little bit of suspicion about why they've been behaving in that way. But, that's kind of beside the point to some degree. So let's imagine, though, that we can trust, the Tron DAO. We do think that they're going to deploy all of this capital if they need to defend the peg. Well, the one thing that again, we have to be concerned about is, if USDD survives this time, and if it continues to grow in its market cap, then even though, over $2 billion worth of collateral looks like a lot now, it might not look like that much in the future when, let's say, the supply of USDD has been increasing, and let's say that the bear market continues to deepen, the prices get worse and worse. The thing about the collateral here is that a lot of it, the majority of it, is in TRX, which is a volatile asset, and it's frankly one that we just look at the TRX price history, it's not blowing anyone's mind with this price action, right? It's been mostly kind of, really ever since the beginning, more or less just kind of sideways, right? It's not going to anywhere near its all-time high back when it first launched back in 2017, 2018. And it's more or less just kind of been chopping around. And so I personally don't really have a whole lot of faith that in a massive second leg of a capitulation down, that TRX would just be able to hold at a constant rate, which would mean that this current valuation in this $2 billion that's coming from this 10.8 billion TRX in their reserves, this could drop very fast, very quickly, and that would shrink the size of this collateral quite precipitously. And the other thing that's questionable about this as well is that there's not necessarily as much, $10 billion, or excuse me, whatever proportion of this collateral is in TRX. This is the paper value of TRX. It's not to say they could actually get that much liquidity out of it if they had to dump 10 billion TRX onto the market. It's actually, the amount of actual collateral that's sitting back here is probably quite a bit lower, because if you tried to market sell this amount of TRX to boost the USDD peg, you would be dropping the price of TRX quite drastically in the process. The actual amount of value you'd be able to extract out of this TRX is probably quite a bit lower, and so this is in some ways an artificial value here. Same degree to some degree with Bitcoin, but their Bitcoin reserves are so much smaller that is less of an issue. It's more that I think this TRX portion of the reserves is very deceiving, because there's probably quite a bit less liquidity you get out of it than they're representing in this number here. But let's also just look at, UST as a comparison and think about this. Like, let's imagine that this 2.3 billion was actually the amount of collateral they had, and they could actually deploy that amount of dollars to boost the peg. Well, the one thing that we know was that the Luna Foundation Guard, which was basically the equivalent of what the Tron DAO is hoping to be for USDD, the Luna Foundation Guard had about $3 billion worth of assets, but again, paper value, not necessarily their pure value, that they at least claim to use to try to save the UST peg. Now, again, I've said there's been some speculation out there about whether or not they really deployed all of this, but again, that's speculation and somewhat conspiracy theory. I think it's most likely they did, expend most of it, if not all of it, to try to defend the peg. But again, it didn't work. Look what happened. We ended up going to zero. And now, granted, that was at a time, if we look at the historical snapshot soon before the crash, this is from April 3rd, which is about the peak of the Luna price and UST. So this is about a month before the crash happened, but it's kind of close to its peak market cap here. Around $16 billion. And so if, USDD were to get bigger and bigger and kind of grow as a proportion of this collateral size, just because there's quite a bit of collateral sitting there doesn't mean it could save it from a death spiral or a bank run in a big capitulation type moment. And so really the point of this video and what I wanted to get across, or just to talk about, now again, not financial advice. You do whatever you want with your own money. If you feel like getting into USDD, more power to you, do whatever you want with your money. But if you are going to get into USDD, I do think it's critically important that you know what the risks are, and you know that those risks haven't changed. Just because USDD might pull out of this, and who knows, USDD could go on for quite a while existing, that doesn't mean that it can't do this, because the mechanism is identical and therefore is always open up to this risk. And so really the question that I think anyone who wants to get into USDD has to ask themselves is, do you think that it's able to survive a prolonged bear market? Because, indications are that this bear market is probably not going to just go away overnight. We're probably going to be, in the doldrums for a while now. Do you think USDD can survive that? And then if you do think it can survive that, do you also think that you are really necessarily going to be able to catch it if it does start to collapse, and could get out before that happens? Because really, when you're thinking about what the upside is of holding USDD, it's the, whatever 30% yield, whatever they're offering, and they don't really, say where that yield's coming from. That's a separate issue. You're holding it for 30% annual yield, but then also you have complete downside. You risk losing everything for 30% APY. That's the other question you have to ask yourself is that worth the risk? And who knows, it might be for you. And, again, I'm not going to tell you what to do. But, in my own personal evaluation, I don't see, 30% APY as being worth it for the possibility of losing the entire investment that you put in. Because, again, this is called a stablecoin, but it's not, we know that this stability is fragile and you very well could go to zero, in which case you're losing everything that you would have put in. So that's the long and short of this update, right? Is that it doesn't look like USDD is necessarily going to collapse right now. This is consistent with what I thought as the DPEG happened. I'll link back to that video as well, where I talked about that, at the time it was happening and why I thought USDD was, very plausibly going to pull through this. But just because that's happening, don't see that as a sign of resilience or that the death spiral can't happen. It very, very much could happen in the future. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. We put a lot of updates about our indicators and more over there.